previous year was 42% year over year before that. So that's where the kind of the misunderstanding would come from.
Right. I mean, real estate is a seasonal venture, right? So you've got spring, summer. It's always going to be trending upward in a normal market, right? Unless something crazy is happening like 2008, and then you'll see fall. It starts to plateau, and then winter. I mean, it's cold. No one wants to go out and look at homes.
Right.
You've got big holidays. You've got Thanksgiving. Yeah. You said people are with family. People are traveling. It's just not a time unless you have to buy a house. Maybe you're relocating for work. You're not going to go out and buy a house. You're going to wait until January. You're going to wait until it gets warmer, and then you're going to go out and do your shopping.
Absolutely.
Well, that same report you were talking about said that 31 million people nationwide said they're going to try to buy a home this year.
Yes, 31
million.
10% of America wants to buy a new home this year.
Okay, and so and we're looking at 6,000 houses being available.
Well, 6 million.
6 million, man. Yeah. Give or take 1,000, right?
Yeah.
But I meant 6 million. So 6 million. So we're going to be at a deficit again. And so, what are you seeing right now? What's your advice to the clients that you're talking to currently?
Right. So I think I'll give you this little tidbit. A lot of the talk on prices and why they've gone up. Obviously, interest rates have been low for the last few years. They've gone down to the 3 and the 2%. So that was a big thing for the reason. What a lot of people don't understand, and this data is available online, is for many, many decades, right? The U.S. has been, not just in Austin, obviously all over the country, has been underbuilding in terms of homes, right? I mean, if you look at, in 2023 now, you look at 20 to 40, the age range of kind of first-time home buyers, people that are buying homes. If you look from 1960 to 2000, right, when we had probably an average 2.5 million people either coming to the U.S., being born into the U.S., as we're now into 2000, they're getting to that 20, and now to 2020, they're getting to that 40 age. On average, we've only had about half of that number in houses being built. Obviously, those people have to go somewhere. There's a lot of articles you can find out there that we've been underbuilding in the U.S. for decades. And then if you actually look at 2010 to 2020, it was about a quarter of the population growth. So, I went on the MLS and looked at statistics and kind of wanted to see if this big, kind of surge in growth that we had over the last 2 years was forecastable. And you can see that since about 2016, 2017, the inventory, at least in Austin, has been steadily decreasing year over year. There's 10,000 homes available, then 8, then 6, then 4. And so you could kind of see that this was coming because not only were interest rates low, but there were just no houses to buy.
Right.
I remember I had a house I listed in Cedar Park, and I looked the previous year when the market started exploding, there was like 122 houses in Cedar Park. When it started exploding, there was 12.
Right.
12 homes to buy in Cedar Park.
I remember they're going down to 1.
Yeah.
There was one.
So there's 20 bids on every house, and that's one of the reasons the prices were so high.
So what I'm hearing right now is if you're out there, if you don't want to get to that point where 2 years ago or even a year ago you couldn't get to a house because there was a 5-mile line and you had to have $75,000 over asking price, you need to go buy a house right now. And then interest rates, when they do come down, you can just refinance, because if you wait, then all of a sudden the bubble's gonna be the fact that you can actually go look at houses and pick out one you like.
Yeah.
You're gonna have to get back to that market where it comes on paper and you're like, I want it.
Right.
So.
But I always tell people, obviously, if you buy when the prices are high at a low interest rate,
right.
If prices come down, you can't go back to that seller and say, hey, it's now I bought it at 5, it's now worth 3. Will you give me $200,000 back, right? But if you buy it at 3 when rates are high, sure, your monthly might be a little bit higher if your rate's double or whatever, and you don't have a lot of money to put down. But if that rate comes back down, you can go to the bank and refinance and say, hey, I want to get a lower rate, right? So there's always that option available.
Yeah, and that's one of the things too, is that the buy down. The buy down program we used to do it a lot. We're doing it a lot more now. Is available. So with everything going on, there's very little doubt in the mortgage industry that by summertime rates will be in the 5s. There's very little doubt. Now, again, it is an estimate and there's no proof or anything else, but there's very little doubt. So by putting something on a 2-1 buy down and then refinancing next year, keeping that rate, so your payment stays the same the whole time between now and next year, and you're only talking about a year, so it's not like you've lost a whole lot of time if you've been in the house 4 or 5 years to refinance. And so keeps your payment the same, because no matter what people say, purchasing a home comes down to monthly payment.
So we're at about 6.2 right now.
Yes,
right?
low 6s. Rates are low 6s.
So you think? But a whole point is going to sway a bunch of people.
That's
they're going to be like
$80,000.
Yeah, that's going to sway. So and that could happen by summertime. it's one of the best times to go buy a house. It's quite the opposite.
Yeah, and I mean that's like I said, that's at a minimum $80,000 a house. So if you're qualified for a $500,000 house, the points drop. You're now qualified for 480 or 580, 600, and just depending on taxes and insurance.
Right.
Well, you do lots of things. So you work with investors, and we'll talk a little bit about that next segment. You work with buyers, you work with sellers. How do people get a hold of you?
So the best way to contact me is probably just my cell phone or my email address.
Okay.
Both. I mean, if you Google my name online, you just type in Dylan Haines broker, Dylan Haines real estate, something will come up.
Okay.
I like to keep my information available and
All
out
right.
there, so it's pretty easy to find me.
Now, what's your phone number?
So my phone number is 512-633-0864.
One more time.
512-633-0864. You can call me, you can text me. Again, that is my cell. Try not to spam me or send me anything crazy, but
Okay. Fair enough, yeah. And no opinions about the Longhorns and what they're going to do next year, right? Yeah.
No opinions.
No opinions like that. So
They're going to do great.
And so, and we'll hit this because we're about out of time here for this segment, but talk a little bit about, just to tease them a little bit, about some investment opportunities that you work with your clients with.
Sure. So obviously, since we've seen all the surge in prices in these last 2 years, it's pushed a lot of investors out of the market, right? It's been predominantly people coming to buy homes, and obviously the homes that were cash flowing for investors aren't really doing so anymore because the prices are so high. But what I've seen a lot of people doing now in Austin, and what I've actually done myself, is investing in short-term rentals. Right, in Austin, we've got a great tourism market. People come for these big festivals. We've got South by Southwest, ACL. We've got a kite festival that brings 1,000 people to Zilker Park.
Crazy.
It's crazy. I mean, the amount of attractions that we have here. And then we got small towns outside Fredericksburg. It's kind of our Napa Valley here in Austin. And what you see, I've just helped investors buying short-term rentals, putting them on Airbnb, VRBO, and they're making crazy amounts of cash. I mean, from what a typical 12-month rental would do, we're seeing 2 to 3 to 4 times as much.
And we'll talk a little bit more about that next time. I'm very interested to learn a little bit more about that, and we'll talk about that in the main segment.
Absolutely. And again, if you want to get a hold of Dylan Haines, please reach out to him on his cell, which is 512-633-0864. You've been listening to the Home Team with Troy and White. We hope you've enjoyed what you've heard so far today. Please give me a call at 855-299-HOME or reach out to me on loansfromtroy.com. And this segment was brought to you by Security National Mortgage. And we will see you in just a minute.